This is exactly the time where investors are better off being very cautious rather than giving into these decibel levels of buy the dip or buy the stock or buy that. So I think one of those times where let the current pass. China is one of the biggest economy, or the second biggest economy of the world, is still not fully open. It is not the best health that you would want the global economy to be in. Getting rich fast is always risky. There is no get rich quick in the world of investing. The only get rich quick analogy in world of investment is luck. You cannot just come in and buy a stock because someone told you so.
In today's episode, we thought of getting someone who has seen the financial world from very close. He spent 20 years of his life in a bank, and now he's come up with a cool startup by the bank itself. And this is something very fascinating to me, to understand how a large organization which is traditionally run, how can they come up with something cool and compete with the startups of the future? How are they trying to modernize their messages, which can be relatable to the Gen Z, to the millennials, to the future generation of our country? How in the world investors like you and me, like common people, can make a lot of money just by being patient and not being impatient about it? What are the things which we need to keep in mind? What are the things which we need to learn and understand in order to make a lot of wealth? And what happens in US and Russia and China and Japan, and how all of these things around the world which are happening is really important for us as a common investor as well. We've talked about a lot of this stuff. In fact, we've touched upon all the broader themes which a common man should need to learn in their life in order to make a lot of money, and why there's an income disparity in our country and how we can bridge that gap as well. So if you want to understand finance world, the countries, the geopolitics, what goes on around the world and how it affects your and my life, make sure that you watch this episode till the end, because it's a really intense and intelligent podcast which you will thank yourself for by giving out time to just complete this till the end.
But we generally want people to come with a view कि बस पैसा serious चीज़ है कि don't come because your next door neighbor told you to buy this stock and you came on our
But
app.
ऐसे सब सारे लोग ऐसे ही आए हैं अभी तक stock market में. Everybody is like, somebody told me like, oh yeah, you should invest. Then other person tells you should invest, and that's how we all end
तो
up.
अच्छा है ना, they've got us the audience and अब कर लेंगे जो करना है.
Nice.
But 20 साल पहले कोटक में हम लोगों ने ऐसी शुरू. I've been with Kotak for about 20 years.
Okay.
It's always been the case that people come because there's a big trend and big fashion. Then they hurt. Today in India, there's a big crypto refugees, right? As a population, people who did that and are now nursing their wounds. So at some stage, what do? Now, if you call them out and say that you made a big blunder, you're not going to get them back. The point is, someone has to lead them back and say, "Ki boss,
Yeah.
kar liya, dekh liya.
आ जाओ.
Now when you come and just chill and actually create capital over a period of time." So ultimately, it is not art; it is science. Money management is science. Art part of it is just temperament. But you cannot just come in and buy a stock because someone told you so. There is a difference between betting on the 35 on a roulette table versus betting on a stock. Stock mein, there is a balance sheet, there is a P&L. Might as well just go through with it. So I think some of those tenets will work.
Yeah, go ahead. Like, I want to go deeper on this before even we get into the podcast. I want to understand this. You said investing is not an art, is a science. Go deeper on this. Like, what do you mean by that?
What I'm saying is that it's okay to be emotional with certain views, but ultimately when you make that decision, you're making a decision to buy a particular company, right? As far as stocks is concerned, or buy a particular bond. Now, all these are heavily substantiated with what the company stands for, what the company makes as a product, who the consumers of the company is, what kind of profits are there, what kind of margins are there. And my 18-year-old niece the other day comes to me and says, I'm buying the stock. I just asked her 4 questions. I said, okay, what does the company do? What's the market cap of the company? No clue. Why? Because everyone in the college would have downloaded a cool fintech app with a great UI UX, may have got some reward coins also in the process of doing that, and now want to trade into stocks. I said, okay, do that. It's fine. It's actually better than not doing it.
Yeah.
So the only thing worse than what you are doing is to not do it. So the fact that you're doing it is great. Why don't you just push yourself one step extra and answer these 4 questions? What is it that the company does? what is the market cap of the company? Is it a market leader in what it does? And is the company making profit or the company making loss? ये 4 क्वेश्चन तो हिंदी में भी आंसर हो सकते हैं. इतना तो पूछ लो बॉस. आई मीन ठीक है, इसके लिए तुम्हें कोई रेशियोज की दरकार नहीं
नहीं
है.
देखना है.
बट एटलीस्ट दीज 4 क्वेश्चंस तो आंसर कर लो.
And true, like most of the people who invest in certain stocks, if you ask them, ये चारों questions के आंसर दे दो, कौन सी कंपनी में लगा, नहीं पता होगा.
Yeah.
It's just कि पास वाले ने या दोस्त
And
ने
look,
बोला.
there are so many mythbusters, Raj, that people believe that the simpler the product is, more people can buy, right? The simplest product that I can think of is crypto. I mean, उससे ज़्यादा complicated product हो सकता है लाइफ में कि what is blockchain, what is this? But just because it was conceived and conceptualized as a cool product, everybody jumped into it, right? So there is a learning for people like us from that, and there is a learning for investors also in that. Learning for us is you create the right ecosystem and the right pool for the customers to come in, right? What is it that crypto investors loved? Crypto investors loved agility. Crypto investors loved 24 by 7 trading environment. Crypto investors loved very fast paced, fast moving stuff and good UI UX. Why can't an incumbent player dish out good quality products but in that environment? So I think if you marry the learning from that and then move the needle from just a high risk product to all products, get the customer to come in, but tell them that at this point in time, when the entire world is raising interest rates, 6 महीना बैठ जाओ यार. 6 महीने में फिक्स डिपॉजिट में 60% मिलता है तो लेकर के रख लो. द वर्ल्ड इज नॉट गोइंग एनीवेयर.
Yeah.
So I think who tells them that? So that's the part that we in Cherry are trying to solve. That wealth management can cut across multiple products. Great to do stocks, but do it by minimizing information arbitrage. I think that's what I meant. When you start minimizing information arbitrage, you are bringing more of science into it because you are getting into an analytical bent of mind and you're asking questions. So even my LinkedIn posts generally are provoking investors to ask questions and minimize information arbitrage.
So, but I understand this game, and like at the end of the day, you will be well aware and you'll be making well informed decisions once you minimize the information arbitrage. That's fair. But there's a common narrative, especially in the young people. There's a fire moment, there's everything around it, right? If we want it fast, we want everything quick. There's a famous saying in US, right, that we all have microwave generation. We want everything in 30 minutes. Similarly, we see it as wealth as well. Like in 5 years, you want to be rich because every day you open, I don't know, Forbes, you open your story for you do all these pages and you will get to know, oh, this guy became billionaire at 19, at 30, at 21. So everybody wants very, very fast. So is there any way that people can get it fast, or what do you feel like the whole notion is also wrong? Like what's the scene?
So getting rich fast is always risky, right? But you do once in a while live in the fast lane. So I think investing by this notion has to be called out and said that you can be brutally lucky if you made an investment right, but do not try it again. If you make it once, please cash your chips and go out because you're not going to get your luck again twice. But I think what will happen in India if young people really want to go down that road is a California moment, is a Silicon Valley moment. Try doing that through innovating and turning entrepreneurs rather than moving into investment and trying to shorten that time horizon. I think Kunal Behel yesterday tweeted well that the number of 18-year-olds running entrepreneurships in India is a cool thing. I'm all for it. I'm all for people coming in, trying their hands at entrepreneurship. I actually truly believe that India's moment in the sun is now in terms of nothing can stop the culture of innovation and entrepreneurship. But that's a different skill set. That's a different nuance. But to get into the stock market and trying to think that this is how it will happen, that's a very different skill set. It doesn't happen like that because companies come, companies go. And usually by the time you enter, maybe it's the time that a lot of other informed investors are moving out. So do not confuse luck with a proven sort of a model to get rich quick. There is no get rich quick in the world of investing. The only get rich quick analogy in world of investment is luck.
Fair. No, it makes sense that if you want to make money quick or if you want to make money fast or anything of that sort, you make money by making, not by investing.
Exactly.
That's the whole idea, right? And what's your take on spending and consumerism? I was reading a study and research by BCG, I guess. I don't know if I'm quoting it wrong, but it was BCG that earlier, like in our parents' generation, they used to save more than 54% of their income. Now in our generation, we save less than 17% of our income, right? So we're spending more, we're buying more things, we're doing more things, right? So this also this gives us an opportunity to like buy more things and get economy to a better space, but it's like a worrisome place because nobody's investing, nobody's saving now. So what's your take on this? Like, people should spend more. What should they do?
But see, that'll be patronizing too much, right? Do what you're comfortable with. I think once people start investing, we can still tell them what's right. But uh, quite honestly, money management is all about being in your skin. If you think, and again, a very Western culture, 20 years ago, everyone would spend more than they earn. They would max out their credit cards, they would max out their
Credit
loans.
score, yeah.
And they will. And so at some stage, the fact that Indians, this generation of Indians, whether it's Gen Zs or the last millennials, are doing that is no surprise. Usually, most of the trends that happen in the US are leapfrog back in India.
Yeah.
But also, what is true is life expectancies are going to be much higher than what it was. So, at some stage, whether you have a realization now or whether you have a realization when you're in your 40s or 50s, there was a time not too long back, and there is a book called 100-Year Life written by two London School of Economists. It's a very fascinating book. Essentially, what the book says is not too long ago, you would start work at about 23, 24. You would retire at about 58, and you would kiss goodbye to the world at about 72, 73, right? So, in other words, you would work for about 35 odd years to save enough money to last the next 14 years. 58 to 72 is 14. So the maths was like this, that you work for 35 years, you save for the next 14 years. Look at the maths now. Your retirement age hasn't changed. Maximum 58 has become 60. You are all going to live till 85, 90, 95, if not more. So now all of a sudden the equation changes where you're working for 35 years and you have to save for 35 years. It's simple maths. You don't need a banker to come here and tell you that if you have to earn 35 years for 14 years versus you have to earn 35 years for the next 35 years, should you bring about a behavior change, yes or no? Because old age can be a bane or a boon, both in terms of physical fitness and your personal balance sheet. You can either have an outstanding life with enough balance sheet to keep you happy and enough physical fitness to keep yourself happy, or you'll be one of those who will be left to fend for yourself with no money and no physical fitness. I think there are trends changing. There are trends changing in terms of world of expectancy. There are trends changing in the way things are shrinking. So, what was an IBM Watson moment where when IBM first got the supercomputer, there were a bunch of people who said that, listen, instead of we getting disrupted, they will still need someone to run that machine. And people who kept fighting that trend were washed out. And people who reskilled themselves and moved to managing Watson were the ones who sort of survived for the next 20 years. Similarly, upskilling is another big thing, right? So this generation have to keep realizing that if you don't upskill, 50% of all that you're going to do is going to be done by robots or is going to be done by others. So things around playing for a much larger life expectancy, things around the fact that your cycles are shortening frightfully so, and hence you have to upskill. Those are trends you can't wish away. But whether we do it like in crypto, even when crypto was at its peak, there were a lot of voices of sanity which said that it's a clear case of low monetary regime fueling a big asset bubble. But who listens to it, right? At that point in time, $3,000 crypto was trading at $64,000 crypto, and there were podcasts and podcasts around how they were overnight crypto billionaires. So no one was keen to look at that. But the reality was still there. People knew that once the money starts getting tightened, it will happen. So I think many times voices of sanity talk about things, but you only realize it when it happens to you. So for this generation, only word of caution, and not as a banker, but as somebody who's been there, is for sure live your life, for sure consume. But the reality is these are two realities that you can't wish away. You have to live a longer life, make it a fortunate life for yourself, and you have no option but to upskill. And upskill at some stage will require money. So be clear on all of that, right?
Let's talk about upscaling, right? You picked out like a really cool point. And I feel this is really important for everybody to just understand and reinvent themselves every 3 years. Forget now like 10 years or 20 years, because every 3 years there's a new wave of technology, new jobs which were never existed before. Right. So what do you think, like what are the top 3 skills which people need to upskill themselves in today's world? Like, as of now, I mean, I'm sure in next 2 years or 3 years it'll change, but what's
I think all of us need to get into some level of digital quotient up. Now, whether it is a full-fledged coding role, but I don't think any one of us, and more so over the next 5 years, will be very relevant if we are absolute novices as far as digital quotient is concerned. So at least get comfortable as far as understanding the broad world of how digital economy works. So depending on if your job entails a slightly more primitive skilling requirement, or like for example for me, after 21 years of doing something where technology had very limited role, or at least so we thought, I completely pivoted into something where technology is the heart of it.
Yeah.
It took me a while because a lot of unlearning learning happens at especially after you spend 20-21 years in a very strong sort of a domain role. But I took that call myself because I have another 20 years in front of me of a very active life. And I said the current role can get disrupted very quickly. So I truly believe that everybody should upskill themselves as far as digital quotient by and large broadly is concerned. So that's one big upskilling that's to be done. I think second is it's time to be more worldly wise.
So wait, sorry. When you mean digital, you mean technology. Like let's just say, just get into technology. Understand. Either you become tech driven or tech enabled, but you need to understand.
Yeah, and you need to be comfortable with what the whole ecosystem is. I don't think technology is just about being relegating to having an Insta handle or a Facebook handle.
course.
You got to just at least understand how you can disseminate a lot of things, services, information, products using technology. I mean, the other thing I also think that Indians are generally worldly wise. So that is one skill that will keep us well, because usually developed countries has got one big issue is that they're very straitjacketed. They're very good in one thing that they do, but they're not very worldly wise. And I think looking at trends across the world sometimes is a great way to also help yourself upskill, because what is the next trend that is prevalent? And if you look at time and time again, both tangible and intangible trends at least have entered India after being prevalent in US for a long time. Whether it's the spending pattern that you mentioned, whether it's the telecom revolution, whether it's the tech revolution, wo aata hi aata hai. And to that extent, one of the things that hopefully we get to talk is this whole ETF revolution in India. In US, nobody buys mutual funds anymore. Everybody buys ETFs because for the fraction of a cost, you are able to get equity returns. And I'm just giving an example in my domain, but so many examples are there. Till about 6-7 years ago, the narrative in India was e-commerce nahi chalega India mein, because India mein koi bhi grocery online nahi kharidega. You have to go and sungo your dhaniya and sungo your mint, only then will you buy. Look at it today, right? I have a party on Friday and most of my shopping is happening online. So things change, people change, trends change. So the other thing that people should do is generally be more aware. I don't think in this kind of a world where things are happening, one should limit themselves and be very archaic in thinking that jo mein aata hai, wo aata hai. So the upskilling in terms of being very, very aware is also very crucial. So I think those are 2-3 things if one can leave people with. And
Okay. But how do you upgrade your business acumen? Because I'm sure, like, you started your career. Okay, before you answer this question, I want to go back to first, like, you joined Kotak 20 years ago.
Yeah, 2001.
Okay. And how did you get into it? Like, tell me that about it.
No, that's a very complicated route. I passed out of college. They offered me a job. I took it.
Achha, the first job you took it is the
It's
same
campus
job?
placement. They just asked me a question. Are you a thinker or are you a doer? 5 people before me, they all were asked the same question. All of them said thinker. I said, let me shuffle it up. I said, I'm a doer. I'm the only one who got a job. And I stuck ever since. And the guy who recruited me is still my boss now. So
Oh, very fascinating.
I have nothing interesting to give you.
This was interesting enough. This is good. Which college did you go to?
Nursing Manji.
Okay.
For my B school, yeah.
Ah, nice. So, okay. So now that you entered a corporate world, you entered banking, like one of the fascinating careers, I'm sure. 20 years ago, even today, it's like everybody believes that's the place you make maximum money. That's the place you have maximum impact. all of that, right? So how do you upgrade your business acumen? Because in 20 years you must have gone to a lot of dips, a lot of highs, all of that. You must have seen it all. I'm sure, like, you must have seen like at least 2 cycles.
More,
So
yeah. At least capital markets, yes.
capital market 2 cycles, like multiple cycles. So how do you upgrade your business acumen? Because business acumen needs an upgradation every 2 to 3 years. So what do you do now that you don't read business books? What's the scene?
So, see, very early on, someone was holding a talk, emphasized on the whole aspect of knowledge. And I really believe that in our industry, both in fintech and in financial services, unfortunately, the emphasis on knowledge is very low. The emphasis is more on getting cool, aggressive sales guys, getting hotshot sales techniques, this and that. And fintech is all about UI, UX, rewards, incentivizing the customer. But somewhere struck me that we are in a very domains field, whether it's a field of healthcare, financial services, education. The core of it is domain, and domain is knowledge. Business books aside, but I never have betrayed my loyalty towards being one level up as far as knowledge is concerned, because that's one thing we thought is never going to get disrupted. Even if you have to program an AI, you have to have native intelligence to be able to program any tool. So besides having the practical experience of having been through 20 years, meeting customers, seeing business cycles, seeing global financial crisis in 2008, seeing pandemic, seeing geopolitical crisis, seeing 2013 Ben Bernanke ke taper tantrum, seeing 2000.com bust when I was just starting my career, seeing, I think, all of that. Of course, so many great things, liberalization around insurance, advent of technology and embracing of technology in India. So having seen, if you're in the thick of things, you learn a lot and you apply that with reasonable knowledge application. So business books are not knowledge just, right? I mean, they're great. You read it up to a point and then you said, oh, good to great ho gaya, build to last ho gaya, उसे पढ़ पढ़ा के, and you realize that beyond a point it's a very Shivkera, rabble rousing motivation. So छोड़ दिया. But आप general, go back to your not textbooks, but go back, read what products are. Someone talks crypto, go in depth. So I'll generally read a lot, I'll study till I don't get it. So I remember I was in insurance for the first 6 years, 2001 to 2008. 2008, I moved to private wealth.
Okay.
So for me, it was a very big move from a very retail industry to a very niche industry. And Kotak Wealth was the leader. We would only take clients above 5 crores. And insurance means even 1,000 rupiah, 2,000 rupiah customer aa sakta hai. So for 6 months, I remember from one of my management trainees was from ISB. I used to pick him every day and drop him every day. Only one condition कि रोज आने जाने में मुझे एक topics सिखाते रहो. And he was a geek. He was passed out of IIT, ISB. So every day he would teach me one derivative topic, one this topic. So I never betrayed knowledge.
Okay.
And I also felt that 2001 we passed out, we were right place, right time. India boomed, economy opened up. And listen, we are middle class people, right? So only thing that gets us going is we are very scared of not working hard.
Yeah.
हम लोगों में वो डर होता है कि नौकरी चला जाएगा. So मजदूरों के जैसे we'll work hard. India opened up, gave us the right context, and we continued to be very sincere to our job. And
so going back to the topic, like you said, you love reading about concepts and stuff. And I've always heard that people who want to get into investing or want to make wealth, or people who want to start their companies or whatever, like anything in terms of capital world, they need to understand the concept of capitalism. Okay. And if there was a survey done in India, like people who are business owners, I'm talking about small business, MSMEs, everybody, 87% of them don't know what capitalism is. And so it's like, it's crazy. So why don't you tell us, like, what do you think, like, what is capitalism? Why don't you explain us the concept of capitalism?
by the way, while we're talking capitalism, it's under threat, right? Because the entire concept that was started by Milton Friedman, that the existence of a corporate is for profit, worked very well as America being the cradle of capitalism. But they are now challenging that notion because both in terms of an economic cornerstone, which is capitalism, and a political cornerstone, which is democracy, both are being challenged left, right, and center. So it's an ironic time that we are having this conversation. But essentially, capitalism puts the heart of profit making in the center, and it says that the main reason for the existence of a corporate is to maximize capital. Brutally pushes on meritocracy and survival of the fittest. So those are the concepts that if you have the right means and if you have the right merit and if you have the right skills, you should be disproportionately rewarded.
Yeah.
Now, as a capitalist economy, you have to be clear, and we saw US, for example, getting tested in 2008, where for all the capitalistic values, when they were really faced with the risk of capitalism, which means they had to let go of AIG to collapse, they started with letting Freddie Mac and Fannie Mae to collapse, Bear Stearns also. But when it came to a large organization like AIG, as a government, they also stuttered, right? And rightly so, because as a government, you have a very different discourse than as an industrialist. So purely capitalism is all about putting profit making, putting meritocracy, putting survival of fittest at the heart of it. And it does not owe any apology to what means you use, of course, as long as legitimate and within the realms of law and regulation, what means you use to get to the top prize. So essential capitalism is make your money to the best use, and money creates more money. And that's where the whole thing is. And a lot of people think that China, for example, is not a capitalist country, and it is not.
Okay.
But private individuals can still be capitalist.
Yeah.
So capitalism is not a form in which your as a country needs to. Your country can be either a socialist or a capitalist, or as in the 60s and 70s, it was communist was a big quote unquote threat at that point of time. But essentially, capitalism with what puts profit making right in the center of everything.
Yeah.
And they are okay with. But the reason why capitalism is back again in the front of the discussion is the entire disparity of income in the world is also a manifestation of brute capitalism.
Yeah.
So I think that's where the whole issue is now coming around, especially post-pandemic. The income generation or the income disequality has never been more stark than what it is right now.
No, true. In fact, so I was reading about, there's a quote by, I think, James or something, like Winston Churchill keeps quoting this again and again. It's like, in the world of capitalism, there can be a bad capitalist, right? In the world of socialism, there can only be one bad thing, that's socialism. And the reason for him to say this is what? Because every human being, he says, primitively is selfish for happiness, is just optimizing for his own happiness. And that optimization of happiness can come from either more money or more satisfaction or just by more giving to more people. Right? All of this will only happen when you are at a place where you have abundance of wealth. Right? So that's why everybody needs to feel and follow this. What's your take on this? Do you agree or disagree?
I think listen, many of these are really cool sounding idioms also, and they would have worked at a point of time, except that everything goes through a context. In today's world, one of the biggest issues facing the world is genuine inequality and disparity of income.
Yeah.
You try telling this to someone sitting outside, let's say a billionaire's house, he's not going to care two hoots about it. I think the level of inequality and disparity we are seeing the truth may lie somewhere between capitalism and socialism in today's context. And that does not again mean that 25, 30 years later, this again will be true. Biggest example is West Coast, California, right? I mean, look at what happens in San Francisco. San Francisco, the disparity of income is so huge that the problem of homelessness is real. I mean, you can't walk downtown California from one place to the other without meeting at least 5 people inserting the needle or sitting outside or defecating. At some stage, this has happened systematically because the entire technology wave pushed through a formation of capital. But this capital went and lumped up into the top end of the economy, and the bottom end became so unaffordable for people to even live in the city that it started pouring out. And now, post-pandemic, we are seeing that remnants of that thing only increasing in many parts of India and many parts of the world, including some in India as well. So I think there's no perfect answer of capitalism versus socialism. I think many of us, these are ideologies, these are philosophies. There's nothing wrong, there's nothing right. As long as we don't use brutal force of the state to do anything, you should know what it stands for. In a democracy, that's the beauty of it, right? And you choose what the party stands for. And if you think that is what is more correct for you, you go around. But in today's world, naked capitalism, the way it is surely getting challenged and surely getting provoked. So whether the answer to that is socialism or whether the answer to that is a little bit hybrid is still remains to be seen. But disequality or non-parity of income is one of the big issues that the world will have to solve itself as we move forward.
It's fair. Like, what do you think? Like, what should we do as a common person in India? Like, how can more people can get to a significant point of wealth? Like, what do you think? Why is the reason why most of the people, where everybody is anyway starting from a point that where they want to have a good life, they want to create wealth for themselves, why like most people are not able to make? Is there a reason? Like, do you feel what's the major reason why there's a difference between us?
To specifically see, India is a large country, right? So we come with our own sets of complications, which are not always very easy. But at the same time, I also feel at sometimes we are passing through the annals of history, because our demographic dividend is just so rich that it can either it can go in only one direction. Either it goes in the direction where almost 50% of our population is below 30, some say it's even below 25. If we channelize those people coming into the workforce by upskilling them, by forget about upskilling actually, by just skilling them and channelizing them into the right employment culture, I think the future of India is extremely bright. On the other hand, if for some reason, and doesn't look like, because we seem to be going the first route, if for some reason these people are not channelized as far as their right skill is concerned, then you are going to have a very different problem of extremely young lot with no skill, no employment, and that is where social unrest starts spilling out in the society. So I think, by and large, if there is awareness across all of us who's either employed in positions of influence or are creating an enterprise through either small scale or big industries, to ensure that there is reasonable inclusion. And inclusion, I think the large part of inclusion right now is around diversity. But I think if you push the envelope a little bit more, inclusion is also around income streams and income equality. And I think if we can just be a little more conscious of it and make sure that we are actually doing our bit to make sure that many people get the right opportunity, not just as state. I think state and center are still doing what they can, but also as job creators, also as people employing within a firm, that we don't differentiate basis class, we don't differentiate basis income. I think that's a best case. I mean, look at what's happening in Japan. They literally will have to, at some stage, import more and more demographics, because the number of people at certain age and above is so huge that soon they won't have people to just do the basic work required to keep the economy chugging. China is now revisiting their one family, one child policy, because while it reaped dividend up to a point in time, now the demographics is against them. I think it's a golden era for India. I think the fact that we are a good, stable democracy, I think the fact that in general, socialism was at the heart of how we started without actually making capitalists look evil. So there was a right balance that we have. And this rich demographic dividend that we can reap. I think if the script is written well and followed to the T, there's no reason for me to believe that it can be a very fascinating journey for India as we move forward. I mean, I'm a product of the last 20 years of how India opened up. Regular middle class family, educated, but educated okay, decent, got a job, stuck to it, did it sincerely, and just grew along with the company, and the company grew along with India. And I think this story can be played many times out with so many more people who are coming in the skilled labor force as India moves forward.
You talk about the story of India and you gave like a very good justification around it, and everything which you said like makes a lot of sense. Okay, my point is, where do you see like the top 4-5 opportunities for Indians to play, and like what are the industries, what are the businesses, or what is that? Like,
So
where do you
soft
feel?
power for sure. I think we've spoken a lot about soft power for the last almost 10, 20 decades. But if India's soft power used to be more about brain
Soft power
drain,
as in, I don't know.
soft power as in services industry,
Okay.
where people with, so most of the technology companies, most of the top guys are usually Indians. So if at a point in time it was about brain drain, where people from India would move for greener pastures overseas, I think we are seeing that stemming a bit. I think the number of homegrown Indian companies turning unicorns, both in the startup new age companies and old companies becoming bigger and bigger and truly taking the mantle of a multinational company, is now evident.
Yeah.
So I think as India moves towards creating not just strong Indian companies, but actually global multinational companies of repute, that's one area that I feel that
Services.
services is one area that India can do very well. And I think as China comes out of its zero COVID policy, we'll have to see the extent of damage it has caused. But it is for a fact that the longer an economy like that remains shut, and the fact that geopolitics is turning its head in very different ways, India should ideally fancy its chances to take a large part of that
Manufacturing as well.
piece, because we've practically got everything that we want.
Yeah.
We've got large land mass, we've got large employment base, we've got demographics, we've got reasonable law and order, and we've got democracy. So, in some sense, if we believe that we've got the right ingredients, I feel that sometimes we get cynical because a lot of these we think that are just slogans, but they're very smart because it starts getting ingrained in your head. And genuinely, if executed well, next 5, 10, 15 years could be a very golden decade. So I think whether it's the services industry, whether also the fact that we should fancy ourselves from taking away from some of the other manufacturing hubs of the world, including China and India, actually looking at it. Some of these are cliches, but they are absolutely very potent. And I think the other thing that I truly feel more for tier 1 cities, but also at some stage tier 2, tier 3 is as more and more kids graduate and pass out of schools and colleges, I think parents will do well to be more open minded, to channel them into non conventional jobs and actually skilling them into that. I think, like, for example, many of us, when we were passing out, it was your classic doctor, engineer, MBA, banker, architect. So you could almost sort of list down 7, 8, 9 professions which were also glorified, or else you would become a businessman. I think the number of avenues, the number of opportunities that are out there and getting called out in tier 1 cities, it will figure itself out in terms of manifesting itself into tier 2, tier 3 cities.
Yeah.
So I think if our generation of parents keep their mind open, what we used to call it extracurricular activities now are mainstream activities, including, let's say, what successful people like you are doing, whether it's in the area of sports, whether in the area of content, whether it's in the area of digital. I think those are again areas that one should watch out for.
Talking about cool, I was wondering, why did you name such a cool thing to your new thing, Cherry? Like,
Just so that you ask the question.
because like when you look at Kotak, like it's a large bank and traditional how India works, like give your last name and don't think much about it, like just keep going on and build a brand around it. And all of a sudden, then you come up with something like as I was like, it's like as sweet and so simple as like Cherry. Like, why was it like? Is there a conscious
Of course,
decision? Like,
there
what
was a full-fledged
why
marketing team
Cherry?
involved behind it, and a lot of names. When we were very clear that we wanted a new, fresh, a name that does not sort of draw upon the old world system. At the same time, we are very conscious that we always use Cherry by Kotak, because the by Kotak part of it is what builds trust and governance. But the
Yeah.
first line itself of Cherry, out of all the options the marketing team went and picked, while the name sounded fresh, the name sounded young, but there are also interesting word plays that at various points of time we can unleash, right? Cherry picking is all about picking the best investments. Basket of cherries is all about diversification.
stocks,
And
yeah.
having, so I think there are multiple word plays that one we can do, and I'm sure our marketing team is very cleverly thinking of weaving around many of the word plays as we move forward.
No, I like the name. It's kind of cool, and it's very rare to see like a large old business to come up with cool names, because one of it's a fact, like large traditional companies are good at so many things, but they're really bad at naming.
Yeah, this could have been named something as inane as Kotak Digital Platform.
Yeah,
right?
exactly.
But I think to full credit to Kotak in this case, they genuinely wanted this to be a company of the future. They really wanted this to be an offering that stands itself out and does not intimidate the newer generation investors in thinking that it's an old world platform, does not intimidate older consumers thinking that this is only a meeting point for very young investors.
yeah.
And hence that Cherry, smartly adaged by Kotak, packs a punch,
Yeah.
and that's how. And we're actually quite happy about the whole thing.
Yeah, no, it turned out to be well.
Yeah.
So tell me more about it actually. I want to understand more and I want everybody to understand this as well. Like what as a customer or anyone who's like a viewer, what can Cherry do for us? Like what's the difference?
So essentially, it's a one-stop shop for anything that your money can do. That's what the ultimate aim is. We've already fairly deep into that journey. So essentially, we are demystifying the entire investment ecosystem for an investor. We believe that Indian investors have either very large wealth managers who offer them wealth management solutions, or a plethora of DIY fintech platforms which allow them very cool access, but then sort of let them navigate the whole jungle of investments on their own. We believe true wealth management lies somewhere in the middle. A, we want to invite everyone. We don't want this to be restricted to a cozy club of only large investors. And one of the beautiful things about technology is that it is very democratic in nature. Technology doesn't differentiate between a customer on the basis of city A or city B, small or big, wealthy or non-wealthy. So since we are using technology as the means to solve for this problem, we want to take that message forward. And we are fully democratic, where we are saying that all that we have done in the last 20 years as solving for wealth management solutions for some of the richest Indians, we now, without any bias, want to bring it to almost everybody else in India. Back in the day, 5 years ago, when we said India invited for our 811 neo banking option, we want to restate that and say now everyone in India is re-invited for building their investment journey with Cherry. So one part of Cherry is to make sure that any investor is welcome to build their investment journey. Second part of Cherry also says that we will start from where the DIY journeys leave you with. If a DIY journey leaves you with 1,500 mutual funds to choose from, 1,500 stocks to choose from, we believe right wealth management solutions wealth management solutions is all about curating and leading you to right solutions rather than you having to navigate through thousand stocks, 1,000 funds. So the experience in Cherry will not limit itself to giving you just unlimited access to all schemes, but will slightly provoke you to come and say, what are the right 5 mutual funds for you? What are the right 5 stocks for you? And currently, Cherry is a platform where some of these of mutual funds and bunching of stocks are done by some of the top fund houses, are done by some of the top registered investment advisors on the stock basis. But we want investors to come and not be lost in a jungle, but to be guided in terms of picking what is right for them. The other and important point also about what we wanted to do is we wanted to have a very holistic experience for clients, because we believe that true investment management is not just about one product and cranking up the volume around it, whether it's on equity alone or whether it's only on mutual funds. True wealth management is also to tell investor what is right at what point in time. Now, for example, there are 3 listed REITs in India.
Okay.
Now, REITs can be bought for as low as 350 rupees, 400 rupees. And it's one of the few instruments in India which is perpetual. It never extinguishes. It just continues to be there for time immemorial. And you keep getting some coupons on a very regular basis. Now, why should Indian investors not look at something like a REIT, which is extremely low cost, extremely democratized, because you can jump onto a platform like Cherry and use any of your brokers to just come and buy REITs. And it is extremely fractional in nature because it's as low as 350, 400 rupees. Similarly, ETFs, we spoke some time back on ETFs. Now, ETFs has got every ingredient to actually substitute many other investment options.
Yeah.
And I, for once, will not make a statement of saying that in India, ETFs will be the only mutual funds available. I think the truth will lie in the middle, where the right combination of ETF mixed with the right combination of actively managed mutual funds will be the right answer for investors. Now, let's say something like a large cap mutual fund, which essentially plays in the top 100 or listed stocks in India, has one very strong use case for being substituted by an ETF.
Yeah.
And in the last 3 years, 4 years, there is a tendency that we see that generally Nifty has outperformed most of the actively managed funds. Very quickly, I must add, it may not always be the case. And again, people should not get overly carried away by thinking that if in the last 3 years, Nifty has done better. It may not be the case for the next 3 years, but it does very strongly put the notion back that buying of ETF is a very credible opportunity. It is available at almost 30%, 25% of the cost of mutual funds and packs a punch in terms of delivering risk adjusted return. Take the example of a concept like bonds. If India has 10 crore demat account and if India has almost similar number of mutual fund portfolios, much higher number is the number of fixed deposit holders in India. Now, at some stage, people will want a more credible option to just bank-led fixed deposits. So, as the regulator in India has many times said, they want the corporate bond market to be accessible by many retail investors. A lot of cool technology companies who also made access to some of these bonds to investors. We believe that bonds will play a very integral role for investors who are not looking at volatile ride, but are looking at companies with very predictable returns coming back to them. So we at some stage want both first time investors and seasoned investors who are looking at slightly more curated options to come into Cherry and look at options beyond just simple equity as an answer for their wealth management needs.
So now you beautifully explained Cherry, and what I can get sense of, it's all about picking the right things, doing the right thing, right? In guiding about the right thing to the investor, right? I want to go deeper on the thing, like what are people getting wrong? Like why do you feel like the product like this needs to be out there? What are like some of the myths you want to just break out and be like, hey, you know what, this is what is going wrong in the world, and that is why as a platform, as a company, we need to solve in future, or maybe we're solving today.
So, from a consumer point of view, as I said, we are seeing two broad set of extremes in terms of investment solutions being given to customers. At the very top end, you've got some of the best firms giving both advice and access to products through different regulatory licenses that they offer. And those customers are able to get good quality advice or good quality products at reasonable fractional cost. But that's a very fraction of population that ends up getting that service. Or at the bottom end, there are most of these customers who are being wooed by these DIY fintech players who are essentially promising them things like great UI UX journey, discount thrown at them, but very little is being spoken about domain strength. When we talk of fintech, it is usually made up of two words, fin and tech. The DIY tech platforms are solved for tech. Somebody has to solve for fin also, because it is fin and tech is what the right potent combination for fintech really is. I think we come from a very strong fin part of things, and if we embrace the right amount of tech part of it, then it will be a good classic fintech part of it. And by example of what I mean is, when you take away the top end being serviced by the large banks, when you take away the bottom end being serviced by DIY platform, it leaves a very large portion of middle belly of Indian investors who could be first time employed youth of India, people in their mid 30s, looking at creating wealth, being shown right products and not just being thrown loaded mutual funds at them at all points of time. A huge part of that population, we believe, and that's one consumer insight we have, are asking for two things. Are asking for products beyond the obvious, which is only stocks and mutual funds, and are saying that, listen, we are well educated, we are earning well, we've been working for 5-6 years. Give us products besides just what is available for everyone through these DIY platform. Two, in India, there are two ways in which you can make products accessible. You can either make it accessible through the distribution model, or it can be made accessible through the advisory model. So most of these investors are coming and saying, please give us an option which is non-conflicted in nature. I must add that at this point in time, Cherry is not into advisory, but at a point in time, we want to fulfill some of these need gap as we move forward. So for customers who believe that they know what they wish to buy, we will give them best in class product access using our domain capabilities. For people who wish to be handheld with the right licenses at the right point in time, we will give them a very guided and a handheld experience. So we believe that that part of market is still missing. So either people are being thrown open at DIY solutions, or the full-fledged wealth management solutions is restricted to a cozy few.
Interesting. On this, you know, there's another question, like backing on this, that a lot of people are well educated, a lot of people are writing, they would want to enable technology and want to get into investments, right? But a lot of it has to be related to the awareness and information about what's going on, because no matter how good you learn about, let's say, one technology, one industry, one company you want to invest in, one type of product, right? Something which happens in somewhere in the world, like some random part of the world, it can affect you as well. So what do you think, like, a how this happens that something in Russia is so important that India will get affected, or something in China is so affected that US will get affected? That is one complication I want to understand with. And second is how important it is for a normal retail investor to keep an eye or just be aware about the certain things which are going on. And does that affect your day-to-day portfolio as well?
So, look, sentiment is a very powerful thing. You can correlate with any simple example. The day you get a very good news, either in your job front, in terms of your promotion, salary, or let's say you just made a cool debut on the stock market as an IPO, or personal news, you all of a sudden feel you're invincible and you go and shop out, right? It's a very simple. And the days you're feeling bad, the days you're feeling that world is coming to an end, COVID is going to have is wreaking havoc in very different form and fashion, you try to conserve it. Not many people would have lost their jobs. Of course, unfortunately, a lot of migrant laborers did lose their job, but most of the corporates behave very maturely. They, as much as they could, they kept people on the payrolls with some pay cuts, etc. But it's not that world came to an end. So sentiments plays a very important role, and it you can extrapolate it even to greater. Tomorrow, if there is a war-like situation and everyone feeling things will
Going
be
down
very
south, yeah.
gloomy, it starts affecting consumerism in a big way. So the reason why I always urge investors to be very aware is that once you are very aware, you generally get a sense of which way the wind is blowing in terms of the world affairs. If the whole world is in a entangled mess, where you know that it's going to take a long time before the world comes back on its feet, you will be able to gauge which way the sentiment trigger is moving. So, sentiment, and that's why subjects such as behavioral economics has become so important to read, that it is no longer just a very simple temperament based
Yeah.
things, it is a real deal. Two, there are very strong reasons how things are now deeply correlated. Something what happens in Russia has a reaction through which Russia stops supplying gas to Europe. Because of Russia starting to stopping supply of gas to Europe, and Europe approaching winter, Europe will have to switch from usage of gas to usage of, let's say, crude, for example, as one of the sources of energy for keeping themselves warm in the winter. Now, during that time, when Europe moves more and more towards consumption of crude, the oil price starts moving up. Now, when oil price starts moving up, a country like India almost imports 80% of our energy requirement or crude requirement through our import. This thing we are dependent almost 80% of our energy requirement on imports. On top of that, because the world is going through such a mess, there's a general tendency for people to move towards safe haven. And in the absence of a single safe haven, usually US dollar is considered the safe
Yeah.
haven. So now there are two things that are at play. First, there is a pressure on crude oil to move up, and there is a pressure on US dollar to move up. As India, as buyer of crude, you are now being hit with two things. What you buy is becoming more and more expensive, and the commodity that you use to pay with, which is Indian rupee, is also depleting in value. So if a crude oil per barrel is trading at, let's say, $90 per barrel, that $90 now becomes 100, which means you have to shell out $10 more. But each dollar which used to cost, let's say, 75 and now cost 82, means that you have to give more rupees. So it's a
yeah.
double whammy back to you. So now what happened in Russia gets correlated back to Europe, gets correlated back to US, and gets correlated back to India. Now, when the Indian government sees this, ultimately Indian government runs a budget just the way all of us run our household budget. You've got streams of revenue coming and you have streams of expenditure going. Now, all of a sudden, your expenditure bill shoots up. When your expenditure bill shoots up, that pushes interest rates in the opposite direction, where interest rates starts getting more and more expensive, and that generally dampens consumerism all over the place, Indians will start spending that much lower. So I think now this is an oversimplified juxtaposition
Version
of
of,
what
yeah.
happens
No, but
across
it's a
the
great
world.
one. I kind of got a gist of it.
But in general, lot of things will find itself coming back and linking itself back.
So last quick, like 2 questions, and then we can wrap this up. First is, what do you feel like, because there's so many world events happening around the world and people are predicting that the next winter is coming, or maybe winter has already started? Do you feel the recession is coming and it's worse than 2008 or something like that? Or it's just or you're not in the prediction game, or I don't know.
No clue. I think
But what are the broader trends? Like, how can you see whether things are going to be gloomy or no?
yeah,
Because
see
there's a lot of
again,
noise.
from the lens that I look at it, you don't need to be a rocket scientist to feel that clearly it's not the best shape that you would want either global economy or microeconomies to be in. You just come out of two once in a decade, once in a 50-year kind of an event, epidemic or a pandemic rather, and a geopolitical war, which at a point of time threatened itself to almost look like a third world war, etc. So it's not easy. You just come on the back of two once in a 20, 30, 40, 50-year event. A lot of things will get reshaped. We're talking of how world of work from home, how world of office will get shaped. So I think too early for people to open the bubbly and say that, listen, we came out unscathed and there will be nothing about it and the world is as strong. I think it's not as easy as that. A lot of trends will get formed. A lot of these changes are more structural in nature. A lot of people are genuinely embracing different realities to the world. China is one of the biggest economy, or the second biggest economy of the world, is still not fully open. So, without getting into calling a recession or not, it is for sure that it is not the best health that you would want the global economy to be in. And I don't expect the next 6 to 12 months to be anything but wobbly, to be anything but news which will give rise to more and more volatility. This is exactly the time where investors are better off being very cautious rather than giving into these decibel levels of buy the dip or buy the stock or buy that. So I think one of those times, well, let the current pass. If you're an investor, just stay investor, no problem. If you're not an investor, fine, just take your time. There's nothing is running away. But I think 6 to 9 months global economy, India economy may be shorter because we are looking slightly better, but certainly not the time to say that we are looking at the pink of health. India is looking much better than the world is a given.
Yeah.
But overall, in an absolute sense, the world has to sort a lot of its mess out. And it's making us look smart and not for wrong reason. It's not a coincidence that we are looking smart. We actually seem to have balanced inflation and growth very well. And we are reaping the rewards. But uh, overall bumpiness of the world may have some correlation back in India as well.
Interesting. So last question, and then we can walk it up. Like one quick, this I ask everybody, one quick advice for everyone, every investor, or everyone who's watching this, how they can create wealth, or like what are the quick tips?
Just
you
ask
give?
questions. Just ask questions. No quick tip.
Start your own podcast, guys, and do what I'm doing.
Just ask questions. There's no shortcut to it. It's a matter of money. Please treat it with as much seriousness as when a doctor tells you that you have to undergo a major surgery. I'm assuming that you, as whether you are Gen Z, Gen Alpha, Millennial, or let's say someone like me, old age, or not, but I'm assuming that you are not going to, just because a doctor says that you have to get surgery done, you won't ask the next 4 questions of why not, is there a better alternative. Money is no different. Please ask questions, minimize information arbitrage, try to get a little bit more insight into why you're doing what you're doing. After that, if it still turns wrong, it's fine, then it's a great learning experience. But if you made a mistake because you were playing for it anyways out of sheer luck, then I think you deserve to make that mistake. I think minimize information arbitrage, ask as many questions as you can. If not first time, second time, by third time, you will become a pretty decent investor.
1 time, 2 time, 3 time. That's a great one. Thanks for giving that, because uh, everybody wants to get it right on the first go itself. So I think anyone who's doing for the first time should go with minimum amount. Then second time should go for again minimum amount, and then third time, if you actually make it, then you
Exactly.
should go
And
like
yeah,
expand it like little by little. Don't go all in on day one.
Yeah. All I'm saying is treat money with as much responsibility and as much, just because sometimes money is easier available and it's easier to sort of invest. But a couple of things in life is very domain led. Your education, your health, your money. Treat it with responsibility, and I think it'll be all fine.
Perfect. Thanks a lot for doing this. Thanks
Thanks.
for answering all the questions. And thanks for making me look smart in the end because I was asking questions. It was good. Thanks for answering everything, including the stupid questions which I asked you.
No,
So
that's fine. I think
thanks for doing this.
People get what they were looking for.
Thank you so much for watching this episode till the end. I really hope that you will like, share, subscribe, and comment about this episode and tell your friends what did you like about it and what did you not like about it, so that we can improve and you can improve the lives of other people as well. So make sure that you share this with at least one person, because you never know that one idea can change their life, your life, and all of our lives. In fact, it can change the course of the country as well. So if not for you, if not for me, do it for the country, do it for the people, do it for your friend. And we're going to come up with the next episode next week. It's going to be a really important episode. In fact, it's happening for the first time in the world. So make sure that you wait for the next episode as well. Until then, keep figuring out.